Looking at the Good morning, everyone. Looking at the US stock markets, the Dow has earlier on recovered from the 24,000 psychological level. Since then, we did see a recovery above the 25,000 psychological level towards near the 25,200 points. After rising for the past five consecutive trading days, we did see some of the mild profit-taking activities on the Dow Jones Index as the Dow closed about 0.5% on lower overnight. So for now, this could be the potential breakout, pullback, and a potential continuation formation towards the first immediate target at the 25,500 points level towards the 25,800 on the Dow Jones Index. In the meantime, should the 24,500 points fail to hold, we might see further correction or further pullback phase on the Dow back towards the 24,000 psychological level. On the broader market wise, the S&P 500 has earlier recovered from the 2700 psychological level around the EMA 120. Since then, we did see a healthy consolidation breakout above the 2750. Subsequently, the S&P 500 has closed above the 2800 psychological level as well. So for now, we might see some sort of minor weakness or some sort of mild pullback on the S&P 500 towards the 2775 or even towards the 2750 before the next upbound to resume towards the 2850 or even towards the 2870 level. Okay, some of this on the crude prices. The crude prices has again recovered from the 63 US dollars barrel mark. Since then, we did see the crude prices has rallied towards the 75. Subsequently, we did see the renewed volatility on the crude prices as the crude prices sank below the EMA 20 and also the 70 US dollars barrel level towards once again just the EMA 120. The EMA 120 level will serve as a very strong defense for now. Along we did see the recovery from the EMA 120. It continues to make a higher high formation. Once again, we did see a recovery from the EMA 120 along the 66 US dollars barrel level. So for now, we'll be monitoring to see how the crude prices recover back up to see if the crude prices recover back above the 70. Should the 70 level were to be breached, further upside will be seen towards the 75. In the meantime, the 66 will serve as the immediate defense for now, followed by the 63. All in all, despite this recent volatility, crude prices is still forming the higher high and also the higher low formation, implying that the uptrend is still intact for now. Okay, some updates on our local front. The FMKLCI has earlier recovered from the 1660 level, forming the double bottom formation or the W-shaped formation breakout. Subsequently, the FMKLCI trended higher for the 9 consecutive trading days. It managed to breach above the 1730 as well. And yesterday, it has retested the 1760. It has closed just marginally below the 1760 resistance level. For now, we need to monitor for the breakout above the 1760. Should there be a follow-through buy interest above the 1760, we might see further upside for the FMKLCI towards the 1800 psychological level. But given that the FMKLCI has really recovered, rose for the past 9 consecutive trading days, we might see some of the mild profit-taking activities on the FMKLCI taking cue from the weakness in Wall Street back towards the 1730 before the next upbound to resume. On the broader market wise, earlier we did mention that the FM small cap index has formed the bullish candle and we expect a further recovery towards the 14,560 points level. The MACD indicator and so the RSI has been showing signs of positivity as well. So for now, we expect further rotational play on the FM small cap index towards the 14,500 points level to see how it holds there. If the 14,500 points level were to be breached, further upside will be seen towards the 15,100 points level on the FM small cap index. In the meantime, any pullback for now will be a healthy pullback for investors to digest their recent gains. On stocks wise, we can watch out for Econpal. Econpal has been a sharp pullback towards the recent low of around the 54.5 cents a level. After touching the 54.5 cents a level, we did see a compound has staged the gradual recovery pattern. It managed to recover back above the EMA 20 level, and it continues to trade along the EMA 20 level as well. But on yesterday itself, we did see compound has experienced a healthy short-term breakout above the 78.5 cents a level, accompanied by some of the high volumes being traded. Following the breakout above the 78.5 cents, we did see the MACD histogram has turned green, whereas the RSI continues to maintain its stance above the 50 level over the past 1 week trading period. With price rising above the 78.5 cents level, we might expect further upside for a compound towards the 88.5 cents or even towards the previous gap down formation at the 95 cents level. Your stop loss point will be located below the 73.5 cents on a compound. On dialogue, we are seeing a good recovery trend on over the short term on dialogue. After touching the recent all-time high level of around the 3 ringgit and 57 cents level, it has formed the shooting star candle along the 3 ringgit and 57 cents. And subsequently, we did see the renewed weakness on the dialogue just towards near the EMA of 120, which is around the 3 ringgit psychological level. It managed to rebound above the 3 ringgit psychological level recently, and the uptrend orientation formation was also re-established. Following the recent recovery above the EMA 20 level, we are seeing a potential short-term breakout, a pullback just towards the EMA 9, and a potential recovery pattern that we're going to monitor for the next breakout above the 3 ringgit and 33 cents. Should there be a breakout above the 3 ringgit and 33 cents, we might see further upside towards the 350 or even towards the 3 ringgit and 57 cents level on dialogue. Your stop loss point will be located below the 3 ringgit and 20 cents level on dialogue. For Yongtai, price has again recovered from the recent low of around the 1 ringgit and 37 cents a level. The 1 ringgit and 37 cents level will serve as a very strong defense for now. Earlier, we did see price has recovered from the 1 ringgit and 37 cents level, and recently, once again, it managed to recover above the 1 ringgit and 37 cents level yesterday. So for now, we might expect further just a range bound trend on Yongtai towards the 1 ringgit and 49 cents until we can see a breakout and a closing above the 1 ringgit and 49 cents. Only we can confirm that Yongtai could be heading higher towards the 159. Your stop loss point will be located towards the 137. So for now, we need to monitor to see if there's any follow through buying interest above the 1 ringgit and 42 cents level. Should there be a follow through buying interest above that, then we can trade Yongtai towards the 149. On Julian, price is still on a downtrend phase. So for now, any recovery will be just taken as a technical rebound phase. Price has again recovered from the low of around the 1 ringgit and 37 cents level. Subsequently, again we did see a mild recovery towards the EMA 60 level. It rejected the EMA 60, subsequently pulled back towards the 137. And on yesterday itself, we did see Julian has experienced the short-term breakout above the 1 ringgit and 45 cents level, accompanied by some of the improvement in volumes as price closed above the EMA 60 level as well. With the breakout above the 1 ringgit and 45 cents, we could expect further upside for Julian for a technical rebound towards the 156 or even towards the 1 ringgit and 64 cents level. The stop loss will be located below the 1 ringgit and 37 cents level on Julian. Last two company for the day will be firstly is Unimac. Unimac has seen some of the recovery from the low of around the 90 cents a level. Since then, we are seeing some of the accumulation was taking place on a Unimac as some of the higher volumes being traded over the past 2 to 3 weeks trading period between the 96 cents towards the 1 ringgit and 5 cents. For now, we need to monitor for the breakout above the 1 ringgit and 5 cents, given that price has recently recovered from the EMA 60 level as well. So should there be a breakout above the 1 ringgit and 5 cents, we could expect further upside for Unimac towards the 114 or even towards the 1 ringgit and 20 cents level. Your stop loss point will be located below the 96 cents level on Unimac. The last company for the day will be LBS. LBS has seen some of the bullish divergence signal was being formed as earlier price has been forming the double bottom formation along the 83 cents level. Since then, we are seeing the MACD indicator has been forming a higher low of formation throughout this period of time. Once again, it we visited the 83 cents a level and recovered on yesterday itself. For now, we need to monitor for the short-term breakout above the 87.5 cents a level, given that some of the rising volumes or accumulation was taking place on the LBS over the past 1.5 week trading period. Should there be a breakout above the 87.5 cents level, we might see further technical recovery towards the 93 cents or even towards the 98 cents level. The stop loss level will be located towards the 83 cents on the LBS. If you have any questions, you can put in the chat box and I'll reply you shortly. Uh, Anju is still on a downtrend phase, and for now, any recovery will be just taken as a technical rebound phase. Anju has recovered from the 1 ringgit and 63-65 cents level. Since then, we did see a potential bullish divergence signal was being formed as price has been trading lower, but the MACD indicator has been forming a higher low formation. And recently, Anju has experienced the short-term breakout above the 1 ringgit and 98 cents a level, accompanied by some of the higher volumes being traded. With the price continues to maintain its stance above the EMA 9, we could expect further recovery on Anju towards the 2.39 cents level. That would be the immediate target price for now, while any pullback will be a healthy one towards the 1.89 cents. But should the pullback comes below the 1.89 cents level, then we have to cut loss or take profit immediately. So for now, Anju is just on a technical rebound phase. For AYS, most of the steel or metal related companies has been on the recovery trend. Price has again recovered from the 33 cents level, forming a double bottom formation. Subsequently, AYS has experienced the breakout above the 40 cents level. Following the breakout above the 40 cents, we did see the follow through buy interest was noted on AYS as well on the next day itself. That we are expecting further upside for AYS towards the 44.5 cents or even towards the 46.5 cents level. Your stop loss point will be located below the 38.5 cents, and if you can take further risk, the final defense will be located towards the 35.5 cents level for AYS. Similar with the earlier on the Anju, this is just a technical rebound phase. For now, any recovery will be just taken as a technical rebound, and until it forms the higher low formation, only we can confirm for the recovery on AYS. On Silver Dynamic, again, we did mention on this trend line breakout above the 3.42 cents level. Since then, price continues to trend higher towards the recent peak, the first target price at the 3.58 cents, forming some of the dodgy candles. So with the dodgy candles being formed over the past couple of days, we could expect some of the mild profit taking activities on Silver Dynamic back towards the 3.42. Should there be a recovery above the 3.42, we might see further upside on Silver Dynamic back towards the 368 level. Your immediate stop loss will be located towards the 332 level on Silver Dynamic. If there's no further question for today, then we'll end the morning briefing. Thank you.